from a overall perspective is still quite anemic in that sector. So we would tend to be quite selective in terms of our picks there. So it's not that we are overall very constructive about that space at this point of time.
Okay. You are bullish on the capital goods space as well. What in capital goods are you looking at? Is it the pure play names like the L&Ts and the BHELs, or are you looking at a lot of these road companies, a lot of these, some of them highly leveraged, but that could be a good play for the rebound in the investment cycle?
Well, there are two parts of the theme here. First of all, I think process industries investing in incremental capex is still going to be some time away, and it is not only dictated by interest rates or anything of that kind. I think it is just that people are still suffering from the hangover of the capital binge of yesteryears. So to that extent, you still have this issue that there are capacity surpluses available across various sectors like refining, metals, cement. So it's not that you will see people come back and start spending in a hurry. So interest rate is only one of the variables there. I think the bigger thing is there is excess supply out there. So we don't see that instantly turning. Where India genuinely has a deficit is on the infrastructure related areas. So whether it's railways, roads, or probably this whole concept of defense, where India is probably the 9th largest in terms of a defense budget. But unfortunately, we've been the largest importer of defense items for the last many years. So in a sense, there is very little manufactured in India, and there is scope to at least migrate some sub-assemblies, some parts, components from offshore purchases to onshore manufacture. And so these are areas or pockets that we would be more keen to take an exposure on rather than, a bunch of equipment or process industry plays, which probably is still going to struggle a little bit before normal demand growth of the economy sucks out the surplus from the market. So in that regard, I would say, see, L&T is still a conglomerate. It has a finger in virtually every pie of India's economy. So there will be some pockets or the other always probably firing for it. And they have been quite active in terms of their investment in the defense space as well. So that is a name we are constructive about, but not so much on the power plays like BHEL, etc.
Okay, you're not positive on power.
No, we are not positive on this.
Okay. Just to get out of the sectoral discussion, Jitendra, the big question that's bedeviling everybody, facing everybody is when does the economy turn? When do earnings turn? What's your own sense?
See, FY15, I think, was a kind of a watershed here. And just to give you a quick explanation here, see, the kind of commodity and crude carnage that you saw led to a lot of inventory write-downs also. I don't think those are going to recur going forward. So although FY14 at an absolute level is quite bad in the sense of growth, but a part of it was because of what happened in global prices. Now, to add to that, you have this issue about obviously banks becoming tighter in terms of better recognition norms, RBI coming down on the banks that they need to be more prudent on their lending practices and stuff, and which is all leading to this kind of cleansing of corporate India, which is probably very much required. So those are one-time adjustment factors in my view. Going forward, I would say that earnings, if I were to remove all these kind of one-off factors, I would be comfortable saying 11-12% growth is doable for 16. But having said that, the issue is valuation-wise, it's still where we are having a little bit of a discomfort. And India still looks a little bit more expensive given the kind of state of affairs we are in. So it might be about maybe at least about 3 quarters or so before you start seeing the genuine improvement. 4Q clearly from next year will have a very low base where we should be able to post some reasonable growth going forward.
Okay. Just one more stock-specific question, or rather sector-specific question before we let you go. In your key buy calls, I noticed that you have a buy on, or rather you are positive on Hindustan Zinc. Metals in general have not given very good returns in the last 6 to 8 months. Just tell us what the positive triggers could be for Hindustan Zinc.
Sure. Okay. One part that appeals to us about this company is that it's very different from all the other metal names, that it is a net cash company. So it has a huge cash balance on its books. The second part is I would suspect that when government has a target on divestment of almost about 690 billion INR, there is a difficulty in achieving all of it through the market route. So you will need to do probably 1 or 2 strategic divestments as well. India's history has been that, the maximum we have done in terms of market offerings has been probably in the 350-400 range. So the delta has to come from 1 or 2 big bullet names which are like a Balco or a Zinc or something like that. And in case that were to happen, that would be an added trigger for people to take exposure to. Independently of all these technical issues of a garment divestment and stuff like that, I would say Zinc is the one name that our global metals team is most constructive on from a 2-3 year perspective, in a sense that we do see zinc markets coming into a balance, and it's the metal that we are most constructive on.
Okay, what about Coal India? I mean, looks like the government is quite determined to make it a well-run company.
True. See, the question is only about expectation versus deliverance. See, the problem has been that in the past few years, normally people anticipated a certain volume number and it has disappointed in the past, whatever be the reason, whether rail evacuation, whether it was mining related issues and so on. But now they seem to be plugging the very gaps that have probably been a pain point for them. In a sense, these 3 railway lines to incrementally offtake. Now, I am still not of the view that you have all it takes to achieve that 1 billion ton target that the ministry has set out for it. But I think there is clearly some visibility that it can attain, 750, 800, probably in that same time frame. So at least we're moving to a trajectory where volume growth seems to be coming back to the name. So at the margin, I would say that developments are positive on the name.
All right, Jitendra, we leave it at that. Thank you for all your thoughts and about all the stock-specific discussions that we had as well. That's the word coming in from HSBC. They say that the markets will remain flat till the end of the year. However, there are plenty of stocks that they continue to be bullish on.